Hi, and welcome to Leaders in Lending. I'm your host, Jeff Keltner, and I'm joined today by Cathy Myers from First Financial Bank. Cathy, can you tell us a little bit about yourself and about FFB?
Sure. Hi, Jeff. Glad to join you today. I am the leader of the consumer bank. So I'm an executive vice president with First Financial Bank based out of Cincinnati, Ohio. I run the retail branch distribution group, as well as mortgage and consumer lending and small business lending. And I've got support groups in community development and consumer administration. I've been in the industry 37 years, and I've loved every bit of it, actually, and I'm still pretty excited about it.
That's amazing. 37 years is quite a time to stick in industry. What's kept you in the consumer banking space for so long?
Well, I tell you, when I first started with a banking class in college, I thought it was the most boring class I had. And then, of course, I get a job like everybody else that pays the bills in banking. But I tell you what I've always loved is that I'm helping consumers. And I can always find ways to help them more and make a difference in their lives. So sincerely, that keeps me, in the industry and excited about it.
It's great to hear. And as someone who came from technology, I've been perpetually impressed as I talk to bankers about, despite the depictions on Hollywood or whatever of the heartless banker, that almost everybody I speak to in consumer banking got into it really to help people with the kinds of products and services they needed. So it's always good to hear, and I think it's a great North Star to keep you grounded on what's really important about what we do. So, thanks for joining us. I do have a couple of questions to get us started. Hopefully we can dive into them. But my first one was, what's a commonly held belief about the consumer lending space that you passionately disagree with? I like things that are a little more contentious than just the basic who, what, when, where, why. So what's something you disagree with about how most people think about consumer lending?
The more I contemplate how our industry, is to remain relevant for the future, I keep coming back to the same conclusion. It is possible to remain rooted in those fundamentals of banking while doing it a different way, taking in more data points, finding better processes, making sure we're relevant to how clients want to shop and buy today. So, I think that's the contention, is that you don't have to give up basics of banking that are solid and served us well for, centuries, I guess, at this point, or decades at least. You can innovate, and I don't think the two are conflicting.
That's interesting. Now, you mentioned, new data points or new processes. What are the kinds of data points or processes you're looking at as how you innovate on top of those fundamentals of banking?
Well, if we talk about data points that have to do with the consumer, because really everything we do begins and ends with the consumer, it's really learning more about how they manage their financial wellness, if they manage their financial wellness. But you learn how to walk in their shoes and learn from their perspective on how they want to save or borrow or plan for the future. And the more you learn about how they see what they do every day in the financial space and then model your improvements to meet those needs, I think the more relevant you are. So as an example, I think a lot of what we do in banking that is an obstacle is we talk about our perspective. So let me pick unsecured lending, because that's your space. So you might think if there's someone applying for an unsecured loan online on Saturday afternoon, and I got 10 applications that day through Upstart, that they're all the same, that it's somebody who's maybe overextended, right? Maybe desperate because they're searching online, or maybe not as experienced. Pick your persona, but I think most of us as bankers go to our idea of who that person is. But what I'm learning is when you look at the data, it's from all incomes, all educational backgrounds, different reasons why they are where they are and what they have done in borrowing and where they want to go. So to me, the data points helps you truly learn more about the customers. And instead of delivering one solution that fits everybody, you can actually start to tailor it more for those individual needs, which equals a better value for the client.
That's really interesting. And maybe I should have started with this, because you said the thing that you think not everybody agrees with is that there's the fundamentals don't have to change. How do you think about what those fundamentals are? Like, what defines the fundamentals of banking and finance for people that you think are constant from the old ways of doing things and what's going to be happening in the future?
There's a couple lenses for that. So one, I often refer to myself as the George Bailey of banking. So if you happen to watch It's a Wonderful Life during the holidays, I'm George Bailey. And I think that's what we all are. We have people in our community that want a safe place to put their money. And in turn, we lend that money out to the neighbor across the street who wants to buy the house or wants to buy the car. That's really what banking is. And I don't think that changes. You make money, you put it in the bank. You need to take money out if you need more than what you have in the bank. And that's a basic fundamental. If you go to the borrowing space, we have the way we've learned credit from day one, right? You need to make enough money to pay your bills, and then you can take on some more debt. You have to have a good credit history on how you've done that in the past, right? Otherwise, I won't borrow or I won't lend to you. You need to be on your job for so long. Those are the basic kind of 5 C's of credit that, I was taught many years ago, and they still stick. But if we don't look at that, how that relates to a client today, and we as a banking industry don't stay ahead of that, then the customer will find a solution somewhere else. And it might be a less informed solution. It may be a solution that's not as good for them. So I think how we lend in particular with the 5 C's of credit and how we adapt that to be relevant is something that we all should be focusing on. And there's just more data points now. So I think that helps us.
Yeah, we certainly agree that more data points when looked at intelligently can help you make better decisions up and down the process stack from credit to process. I'm curious, you talk about new products and new things your consumers find. I feel like every bank I talk to, and only exacerbated or accelerated during COVID times, is kind of saying, I've got to transform. Digital transformation is kind of the buzzword. I've got to find a way to get digital. I think they feel a lot of pressure from pure digital fintechs or alternative sources. But I'm curious, how do you think about what that digital transformation is, what it looks like, and how you prioritize what you want to do in that space?
Well, when we originally started talking about digitizing the business, I think what we were really saying as an industry is that we needed to automate our basic workflow. So it was really, instead of pushing paper around, how do I put more automation in basically how I open a deposit account, how I move money around, how I borrow. So that's what I think we were really saying in the beginning was digitizing. Now that most of us have baseline capabilities in, to me, what digitization really is doing is saying, how do I help that customer engage, whether it's shopping, purchasing, or servicing, through their device? And in most cases, that's the mobile device these days. It's more the engagement model than the baseline capabilities. And what I believe, and our leadership of our company believes, is that the digital capabilities at the experience level need to be integrated with a human being, an advisor. And that's another place where I think you've got to really push back on the industry, because if you're just going to go in and digitize, and you're not going to couple that with the good foundational banking principles, I worry all the time that someone's going to click, but they're not going to understand what they bought, as an example. So in my family, I'm Aunt Cathy, and everybody who's got a banking question calls Aunt Cathy. Parents, my brothers, sisters, they send the kids my way because Aunt Cathy's a banker, right? She'll help you. And I tell you what, they don't know what they're clicking on. They need a student loan, right, to go to nursing school to get their master's. And they've gone online and they can see the loan. But I'm like, so do you know when interest starts to accrue? No, Aunt Cathy. Do you know when, whether it's a fixed or variable rate? No, Aunt Cathy, what is that? Right? So they could search it, they could find it. They're young kids, they're tech savvy, but they don't really know what they're buying. And that is a risk to me. So we as an industry, if we don't build the capabilities with transparency so people know what they're clicking on, that's one big obstacle. And two, you do need to get to an advisor, whether it's at that time of purchase or sometime down the road. So take the COVID example last year with PPP. We all hurried up and digitized that process for most of our clients or prospects. But when they had a question, who did they talk to? And they still needed to get to a trusted advisor, someone who knew more than they did about what was being asked of them. Maybe some people don't have that issue until they have some big change in their life, a catastrophe, like a health crisis, and then they need some options. I had a friend, Andrew, who came to me on that topic because his son was really, had actually passed away. And he's co-signed a loan for him. And he's like, what do I do? So you may not think you need an advisor immediately, but I'm telling you, good banking principles, good financial wellness principles are eventually you'll need a human being, at least when you're in a crisis, and there's got to be somebody to call. So that maybe was a long way of telling you, I think digital has to be integrated with the ability to talk to somebody when at least you're in a jam and you need some better advice or guidance.
Yeah, I think I love that concept. And we've certainly, as we've seen some of our partners who go digital in the application experience, they start to think of their branches and their branch staff less as loan officers or people who are oriented around the product and more as client advisors, right? Where you can offload some of the processing, the entry, that work onto the digital technology. But the branch staff start to become really there to help the client make smart decisions and can be more focused on that. I'm curious, as you've seen this kind of play out in the context of FFB, how have you thought about what your branch employees do? Have you shifted how you think about their responsibilities or what they're doing with clients? I know that's maybe an odd question in the context where many branches are closed due to COVID. So maybe I'll expand it to call center, but I'm curious how you think about the nature, the changing nature of that interaction in the branch or when you're on the phone, from what can be a transactional relationship or interaction in many instances to something that's more consultative in nature.
Yeah, that's a great question. Actually, for me, it's spot on. It is the main thing I've focused on at First Financial Bank for the last 2.5 years. I came here to help their consumer bank and think of it in the broad concept, not just the branches, but always with call center and digital as a partnership. So the multi-channel approach. I came to help the branch sites and that experience across all channels be more relevant for the future. That's why I'm here. And that's what I thought was exciting. So if you take the site example, the first thing we did was to stop hiring tellers because money handling is really not a career for them. And I explained to all of them, I didn't create this change around us, but I'm here to help you lead through it because I know you have families to feed. So how do I help you be relevant for your future in banking? So we didn't hire any more tellers because we knew that was not a career that was going to be lasting. And then we moved the rest of the staff there, even though there's still one team, into two components. So those who really like servicing or more servicing day-to-day transactions can start a sales conversation. And then we increased the number of advisors who wanted to focus in certain areas to add expertise. And what I would say is you can't say, hey, today you're an advisor and yesterday you were a banker. You don't become an advisor overnight. You have to really start to build an education program, and a lot of that can be self-service. We have to build a program to help you be an advisor, regardless of which area you want to focus on, whether that's consumer or small business, or it's an emerging segment or an affluent segment. To truly be an advisor and do more than lip service to the strategy, you have to start to invest in them, give them self-service ways to learn, help them grow. We've done a lot of voice of the customer work as an example so that you know how to walk in that particular client's shoes, which allows you then to be a better advisor. So it's a journey we're on to create that digital and advisor experience. Again, we changed roles within the building of a branch. Then we started actually to disconnect the sales bankers from the physical site. So they aren't tied necessarily to a building. They're assigned to a portfolio of clients. And their role is to help those clients deepen their relationships with us and grow additional ones. So if that makes sense, I think we're well down a path to make us more relevant for the future because we're more focused on that advisory role and how to build it into something that's meaningful for our clients. And lastly, I tell you, our associates love it. I was totally surprised at the feedback we got from our associates saying, no one's really asked me what segment, what kind of customer I really love working with the most. So while I'll service everybody, I would love to learn more about small business customers, as an example, or more about an affluent client and their needs. And it gave them a chance to kind of stimulate their thinking, feel like they're growing in their careers. And that was really an unexpected benefit of this whole process. That's
really interesting. I'd always thought of that from the consumer's point of view. And I think what you're saying makes a ton of sense. I love the a portfolio of clients versus a branch, because clients don't always walk into the same branch, but they love a consistent relationship. But I hadn't thought of the associate side of that. And that's a really interesting angle that they like the change as well. And it gives them a different focus and a different way to deepen their relationship and their experience. That's really interesting. I am curious, the current economic environment has certainly shifted priorities. Most banks I talk to are lots of deposits coming in, maybe demand for loan going down, and obviously concerns about what happens to the economy, what's happened to loan portfolios. And I'm curious, I know you've got to focus on the consumer, which drives some of the product stuff, but is the overall bank's perspective on the consumer bank or the product portfolio focus shifted as you've looked at what's kind of happening to the banking industry right now and the stresses that are maybe happening, financially from a deposits, loan demand point of view? Has that shifted how you think about where you want to have your focus or things that you're investing in the near term?
Well, I'd say again, the fundamentals have stayed the same. So we're, didn't want to have a knee-jerk reaction to kind of this bubble in time in the economy. So we still stayed solid in wanting to grow consumer lending and make sure we meet that need for the client in the lending space. What I can say though is I personally elevated more focus on unsecured lending. And I'll remind you, I am over mortgage and consumer lending. So with the pressure in the home equity space, right? So if you're just looking at that line item in the consumer bank, home equity lending is flat to down. But that's because the mortgage business was booming last year. So the way I had our team look at it is like, I don't care which bucket it goes into. If we're helping clients either be in the first or second position on their house, as long as it's with the bank, I don't care which silo it's in. And I prefer to look at it lending that way. I'd rather underwrite you as a person and say, which then kind of product is best for you, but not care which silo, first or second mortgage bucket it's in. But what I did tell me is to be relevant in the marketplace, unsecured lending is more popular. And historically, that is an area that has higher risk for a bank, right? And we're more adverse to that. But we've now tried a couple different products in that space on a term loan basis, as well as we've been moving to gen up our credit card business, which we hadn't invested in a lot in the last, 5-8 years. So I've got both pieces of unsecured lending genned up, whether that's term or card-based. And we're using that, again, to learn why, how are we relevant? How can we compete? And how can we ensure that we are credit-wise while we're doing it?
And has that performed well for you? I mean, I know unsecured is often the thing banks are most scared of. Most banks are very used to real estate backed, whether it's commercial real estate or residential real estate loans with high degrees of security. And obviously, unsecured loans are kind of the riskiest kind of lending you can have. Have you seen that play out, or how has the performance of your portfolio looked and the performance of the business through the COVID experience?
Yeah, I'm proud to say our chief credit officer, Bill, he's pleased. So our first product was a quick loan. We actually launched that, I think, right before COVID started. And so we have that portfolio seasoned enough to have a several quarter view of it. And it still has popular demand. And the performance of the portfolio, it meets our credit standards, which are, I'd say, fairly conservative to moderate. And then we just launched with Upstart, and we are watching very closely not only what types of clients are borrowing and why, but we'll be watching over the next 90 days the first payment defaults. So it's too soon to tell, but we're going to watch that piece of our dashboard very closely. And the credit card portfolio is performing just fine. And we've been able to add volume without any additional risk to that portfolio.
Yeah, I think people have been pleasantly surprised by the performance of unsecured assets during this time. It's been, surprisingly quite stable. So it's good to hear that you've had some experience. And I promise you, we're going to deliver on your expectations for your Upstart oriented portfolio as well. So you know how to find me if we don't.
Well, I agree. And I tell you, that's the partners that we've chosen in the our innovation space for lending are ones, again, that are grounded in the basics of banking, and they're building the solution. And I know that sounds so fundamental, but I met with several partners in my career, and they don't know the basics of banking. So how can we feel safe and secure and well informed as we move forward. If you've got someone with a solution that doesn't understand how to meet HMDA criteria, as an example, right? Or hadn't thought about how they were working unsecured debt into their cash flow calculations. You have to have a partner who understands the industry and innovates from there. So, that's one of the things I liked as I got to know the Upstart team.
How do you think about partnerships in this space? I mean, I know there's a big question. Do we build? Do we buy? Do we partner? Can we find the right partners? How do you think about where partnerships make sense, and a little bit on how you think about finding the right partner? I know focus on the fundamentals of banking and the right thing for the consumer is there, but how do you go about finding those partners that are well aligned with you in terms of those priorities?
Yeah, at First Financial, we want to be different. I mean, that's what we put in our marketing and communication materials. We're different. So we need to find partners that are different as well. So we're not running after providers that supply solutions for the biggest banks in the nation, right? Because I'm not going to be one of those, right? I'm not going to be a mass market bank that covers coast to coast. That's not us. But I can serve the communities within the 4 states where we operate. I can find those places where I can make a difference, right? A meaningful difference to the client. And that's what we're looking for. So it can be someone who's building a fundamental platform like Encino with a lending platform, Salesforce with a basic platform. But then it's got to have room for us to customize where we think it makes the biggest difference. So I need a partner who wants to be innovative, right? Who takes the basics of banking and innovates. They have to care that First Financial is a customer, right? So if we're so buried in this long list of customers that we can't have a voice, we can't be on the innovation committee, we can't have a say, then that's not a fit. And we actually bring the leadership of those companies in to meet with our leadership team. We've, with our 3 key partners, I would tell you, we've brought them in and we've had all-day sessions to align on their operating principles, their culture as a company, our culture, and make sure there's a mesh at the cultural level, then the solution level, and then down to the innovation level. So that's how we're making a difference, I think, is with building relationships with the right partner who wants to go forward with us.
Interesting. That's very interesting. I like that approach. So last couple of questions. What's something you've seen in the general consumer lending space that's surprised you? 37 years in the industry, I imagine you've got a lot of stories, but what's something maybe more recently that's surprised you a bit?
Well, we talked the unsecured space, but I was surprised that unsecured lending would be popular. And again, as I'm learning about the types of clients that leverage unsecured lending, I realized how broad that population is and how and that the purpose for it is broad. So that's probably my biggest surprise lately, is just learning about the unsecured space and the different ways we can meet their needs.
Interesting. And how about something you've tried internally outside of launching an unsecured product? Is there something you guys have done internal to FFB where the results have surprised you a bit?
Yeah. One of the things that we did is we launched a innovation center in downtown Cincinnati, and I inherited the lease and the concept to make a space active and test what would make a site active. I inherited the concept and space, but bringing it to life really ended up being my job. So what was a really pleasant surprise is that we realized we could build an open and inviting space, partner with our community to come on in. So I know it's not rocket science to say people have cafes and joint working spaces these days, but the way we built this innovation center, we really did make it open and inviting. And when people came in and were wowed by the way it looked, were wowed that they could use it for free, then the next words out of the mouth were all, gee, I think I should bank with you. And I tell you what, that was I was like, okay, job done. That you really can engage in that personal way in a community and you can get traction to grow. And if you think about all the different ways we can do outreach and marketing to grow your business, sincerely inviting them into your space and engaging with them, I wasn't sure would work. Because again, if you're going 100% digital, you'd say, why do I even need a building? So we've really built on that concept. And we actually are starting to package a program that's rolling out across the footprint to use our spaces in that way.
That's really fascinating, that kind of multi-use space, a little more flexible space, and how I think it actually pairs really well with the digital transformation and the ability to have a space that can meet the needs that are there, as opposed to preconceiving what those are. That's a fascinating story. And what's something you've done recently that you're proud of? I know we talked about this a little bit before, but I wanted to give you a chance to go. What's an achievement you guys have made there at FFB that you're proud of?
Yeah, I'd probably give a shout out to our first mortgage team. They, within 2.5 years, they're just short of a 3-year mark because we elevated that business post our last merger. They hit $1 billion. And that's really going from zero all the way to a full-fledged digital and advisory experience. So that one I'm the most proud of. Ann Davis and her team have really built a great mortgage company. And then they've also extended their reach to help deepen relationships with those clients into the bank. So they're actually a lead product for us and good corporate partners, as well as achieving their $1 billion status.
Congratulations to the team for that. It's a great achievement. So I've got just 3 closing questions that I want to end all my podcasts with, kind of rapid fire style. So they won't take too long. But what's the single best piece of career advice you've ever gotten?
This came from my old boss. She's became my mentor and then friend, and it was never fail. She actually interviewed for that trait. She would look for things in your resume that just showed that, if you were knocked down, you just dusted yourself off and you just got back up and kept on going. And her focus on appreciating that is really was a good tip for me. It's much more fun to win than never try to go for the win. So don't be afraid to fail.
Don't be afraid to fail. I like it. What's the single best advice you've gotten in the consumer lending space?
You just have to do the math. I learned lending from a gentleman who was named Clarence back in the day. And the math that he taught me is the same math you have to do today. So you know what? You shouldn't make a loan unless you know that client can truly handle it. There's no reason to put them behind the 8 ball. So lending, you just have to do your math. And if you feel like that math works out for the client, then you're making a good loan.
I like that. Do the math. We like doing math here. And last one, what's one bold prediction for the future of consumer lending that you have for us? I won't hold you to it when the time comes, but I'm curious what you think's coming. Yeah,
I tell you what, I think I need to keep a few trade secrets to myself, but if I give you a hint, I think we can break down industry silos in the consumer lending space. So if you think about it, and I mentioned this a little earlier in this conversation, but I'll reinforce, you're not underwriting a product. You don't have to. What if we thought more about underwriting a person? And therefore you have so much ability to borrow, and then you can tell me, do you want it, fixed or revolving? Do you want card access or don't you? Do you want to secure it or don't you? But underwrite the person. We talk about that a lot. And, in the industry, in the old days, you use that bad word cross sell. But we'd say, when we get a mortgage, why? Of course you could have a credit card, but we don't have a real easy mechanism to do that for a client. And I think we could make it simpler and easier if we tried to think about it from underwriting the person instead of the product.
Underwrite the person instead of the product. All right. I like it. Cathy, thanks so much for joining me today. I really appreciate it. This was an interesting conversation. I appreciate your sharing your thoughts with our listeners.
Well, it was great to get to talk to you today. Thanks, Jeff. I appreciate it.
Always a pleasure. Thanks.